get started and discuss exactly what we were going to. I'm just going to repost this again in the Discord, and then we'll go ahead with what we need to cover. So there we go. So yeah, Bitcoin, like I said, you've got risk on in the market. You know, it's incessant. It hasn't stopped for a very long time. And it's gone up and up and up and up. And it's the same with various other assets in the risk on environment. Now, when you have risk on, it means people are plowing into the markets, investing in things which would be deemed in many cases risky. Okay, that's why it's called a risk on market, because the risk is on. People are flooding into these things. One of those, of course, is Bitcoin, because Bitcoin relies on belief. It relies on risk. It's fairly new as a tradable asset. Okay, crypto assets. You've obviously had your high there, and you've had your high here. Okay, before that, so you peaked in April of 2021, and then you don't get there again until later that year. So you get this period of time where fear comes in. Okay, the whales take their money. Suddenly, the risk-on environment changes. It's no longer risk-on, and it's risk-off. People take their money out and they start investing it in safe returns. Okay, things that are going to get them safe money, essentially. Things that go up in times of extreme uncertainty, worry, anxiousness, fear, specifically. And that's why you get this. Okay, now the second leg where you fall even further. So you fell from here, okay, and it's important to note this rise. So around coronavirus time, that's when the whales and all long side traders start getting in. That's what causes this boom. The sentiment was very much there for that. And the reason why you're seeing this again, starting in at the end of last year, it's only been a few months and it's gone. So, no, that's the end of the year before. Apologies. So it's early in the morning here, somewhat. End of 2022. So it's only been of a year, coming on to a year and a half or so. But it's been enough to pull you up. Now, the spectrum of price, as I always say in all my videos, is completely related. It correlates to the sentiment. All market value is tied to market sentiment. So what I mean by that is when you've got strong market sentiment to the upside, okay, your short side value grows and your long side value diminishes, because the longer this goes up, the more time there is until the risk on event or the risk on sentiment of the market fades, and then you get your falls. Okay, now that's what happened here, because like I said, the money went into assets that are considered lesser risk, because you had all that news about inflation, how bad the global economy was going to be, energy crisis, war, all sorts. Okay, and Bitcoin, Ethereum, things like that, crypto assets have been very much tied to the overall global market sentiment. So when you've got strength in the stock market, you know, for example, the US 500, the SPX, you get a rise similarly in crypto. And it's because, like I said, people are following that risk on market. Okay, the risk is willing to be taken by market participants, and it becomes more or less correlated. Okay, if you go to something like your SPX, you can see that period of 2021 through to the end of 2022 also fell, and then you get your rise up from the end of 2022 to now, which is exactly what happened in the case of Bitcoin. Okay, the same thing. So you've really got to ask yourself, how long can you go up for? Now, the caveat, or the thing I always say when going over crypto assets or any risk on market, similarly to the SPX, is I'm not saying it can't go higher, okay? And I'm not saying it can't go lower. Trading at its core, when done successfully, is the idea of value, okay? Now, an easy way to measure value is to take the previous highest price or the previous highest ever value that you've seen for this asset and draw a fib level down. And now what happens is you can see that where you've retraced to is coming back to where you fell previously. So there's almost the most value there has ever been. In other words, Bitcoin is almost the highest value based on history. Now, notice a minute ago, I said I'm not saying it can't go higher like that and go higher than the previous high. I'm not saying that at all. I'm not saying it can go down. What I am saying is that at this point, you have got high market value for exits. Now, some of you, again, might say, well, it can go higher because Bitcoin has got this much momentum left, or there's this investment idea around Bitcoin, or Bitcoin's the future. It doesn't really matter, okay, what you think, because all of those ideas are relatively fictional. They're debatable. There'll be some people on this stream that will say the opposite. Okay, Bitcoin doesn't have a future. X, Y, and Z is your reason why. Some people will say Bitcoin does have a future. X, Y, and Z, here's your reason. Now, neither of those arguments actually have any factual basis because they don't involve price and they don't involve an event that has already taken place. They rely on future events. Now, it becomes very risky trading on future events that you think may happen because, like I said, they've got no factual basis and therefore it's an assumption every time. Now, the other trader, which is how I trade, how my co-founder, co-mentor trades when we teach everyone live in our trading room, is different. It's all about the facts. We want to know what was the price before and where did everyone liquidate before. So if I get rid of all of that diagram and I just simply highlight it, you can see that is where you fell before. Now, it's no coincidence that you fall from there, given your previous fall was here. Okay, because what that looks like very much is what is called a market maker stop. In other words, the larger money in the market wants to get the best deal they can. So they look for areas where you've had a previous high and then the dump happens. Now, the reason why the market went slightly higher in that case, about let's say $4,500, is because when they put such a large order in, it moves the market itself, okay? So they're looking to get the optimum price. Now, again, the money market, or the larger money in the market, doesn't know what Bitcoin's going to do in the future, and it doesn't know what it's going to do in the very near term. All it can go off is the past. And that is why the trader that makes decisions on past price makes money consistently, because they're doing it on a factual basis. They're not doing it on a potential basis, okay? So everyone who held their longs there and held their longs there has already been wrong twice and held them on a fictional basis of, I think the price can keep going up. Now, you don't know whether it can or it can't, but it doesn't matter. You don't need to know to make money. If you liquidated your holdings once here, once there, and again, you'd be right 3 times. If it keeps going up, it keeps going up. It doesn't matter because you banked profits over and over again. And then, obviously, when it comes back, like this, which inevitably at some point is going to pull back ferociously as it gets liquidated again and the risk on market fades and people put their money in safe assets on fear, be it temporarily or long term, you can rebuy. Okay, it's not the be all and end all. Okay, so if you look at about 53,000, you've got key support early on. Now, whether it falls from here, like that, or from there, or from there, or from there, nobody knows. But it doesn't, you know, like I said, you don't need to know that to make money. You don't have to tell the future to make money in every single case. If you short in line with this, you're getting optimum short value. The only adjustment you need to make is simply the fact that you have a risk in the market for 2 reasons. Not only is Bitcoin a natural HVA or a high volatility asset, you've also got a risk on market, like I said. So at this current point, everyone is plowing their money into risky assets because they believe there is about to be, or there is now, a flip in market sentiment in terms of basically belief in the growth of the overall global economy, or at least in the US, because inflation is coming down, or at least they say so. In some ways, most reports now are looking slightly sticky, but the overall bias is that things are getting better. Now, whether that's linked with politics or not, again, is another debate. But the data at the moment shows slightly sticky inflation, but on the way they want. That's what all central banks are saying. Now, if that changes and you start to get fear come in the market, the risk on impact, therefore, is likely to fall. And then you'll get that chance, like I said, if you choose to rebuy. Okay? But if you don't liquidate now, so you can rebuy and it comes here, you can't rebuy and you can't take another set of gains if you hold for the long term, if it comes up in your investor belief. And if it comes even further, you still can't rebuy. So what I'm basically getting at here, although it sounds nice to hold it forever, and the idea is that you'll be rich and richer, if you never take your profits, you never make any money. Okay, the only time you actually realize the gains is when you've banked them. And like I said, if you want to rebuy in future, you've got the opportunity to do so. It's not going to be the case that you can never buy Bitcoin again, or you can never buy crypto or any risk-on asset again. HVAs naturally are going to rebound at some point. It's just a matter of when. And if you don't believe me, as I always say, if you don't believe what I'm saying now, all you have to do is look yourself, because it's right there in front of you. There would have been many traders who didn't liquidate up here. They wanted it forever to the upside, so they never made any money. Okay, some of them would have been trading on leverage and got stopped out. Some of them are buying now and may still experience stop out because the leverage is too great. So if you're ever going to buy, you want to do it on dips. You never want to do it when the market has already gone up, because you're diminishing that short side value. Okay, you can see that if you exit now, you've got the chance, if you choose to, and again, if you're going to short, there's a big caveat, big warning with that, it's got to be very, very light, because the larger you're short in a risk-on environment, the more you're exposing yourself to a continued momentum move that takes you higher. Now, like I said, you don't need to know whether it's going to go here, there, or anywhere to make money. If you always liquidate at what is market value, which you can see on the left, again, it's the highest price it's ever been. Yes, it could go up. Yes, it could go down. But the fact is that you've already fallen twice from the same area. Okay? If it becomes the case, and this wouldn't surprise me either, if it becomes the case that you get slightly higher than the previous high, and then you fall again like you had once already, okay, it wouldn't be an absolute shock, because again, if the larger money wants it short, they might do it at a new all-time high, just above the previous one. But like I said, at some point it's got to fall. It's never going to go up forever. And if you look at the amount of months it's gone up already, from September, October, November, December, and so on, that is 3 months there, 7 green candles, 7. Okay, even here you had 1, 2, 3, 4, 5. Okay, 6 candles to the upside, and then you fell. You've now got 7 candles to the upside, albeit this rise was from 10k to 60k. This one is 24 to 65. Okay, so 41,000. It's well over doubled. Okay, so like I said, you've got to look where that short side value is, and an easy way to do that is just to take, and I've deleted all the indicators by accident. That's very easily done, is to take note of where your RSI is, for example, your relative strength index, or your stochastic oscillator, anything that takes an average of price and prints it. Now, if you add in, as we do within our trading method, trading strategy overall, some of these, okay, and let's say, and normally what we'll do is we'll have 4 of them. Lots of people ask me how I set them up. I use these increments because they just give you the easiest gauge for long-term value, and essentially, like I said, what is a high and low price. And all of this relates to an adjustment of risk plans, of which we cover fully in our live room. Okay, I don't cover them for free because people pay me for that. All I'm doing now is simply telling you where the most value is for exiting longs. Like I said, it's a debate whether it will go higher, but the trader who takes his money repeatedly is the one who wins. The ones who hold forever get left with the bag, and it's all over. Okay? By the way, if you're just coming in, don't forget to press the boost, and you can see underneath the training links. So that is your SPX, your Bitcoin, and we're going to go over the SPX also as a risk on market. So if you go to your weekly, it is incessantly rising, okay, and you are now looking at extreme short value and extremely diminished long side value because you were oversold, you're now overbought. Does it mean that as soon as you get to the overbought reading on your stock oscillator or your relative strength index or whatever it is, does that mean it's the end and it's going to fall tomorrow? Absolutely not. And you have to get that in your head. And here's a prime example. Because at this point, where I've just drawn this arrow in this line, you reached overbought territory, okay? And you've still gone up 4,500 to 5,100, 600 points or so, okay? So don't be fooled by that. It's just telling you where you're starting to reach a high value to start the scaling short. Again, because you've got a risk on market and you've got that strong market sentiment, that, you know, your inherent risk goes up, and therefore your size, every single approach you take, the amount of positions you put in, what size they are, has got to change. If you don't change that, you're running extreme risk. Okay. If you look at your previous high, you are absolutely sky high, miles away. Now it's going up and up and up because you don't have market sentiment to pull it down yet. But when you do, okay, everyone will pull their positions out and it will fall. It's not a case of if, it's a case of when. Now I'm just going to refer to the live chat for a sec. Thanks. I'm glad it helps. I teach a lot of people. I have for years. I day trade myself for income, and we do it in a factual way. Anyone wants to join us live on charts with the rest of the academy, we all sit in a live room. Everyone asks questions to us, and we just tell you as it is and how it is. The link to do that is right there underneath. Okay. And yeah, thanks for the comment. I'm glad it helps, as I say. I'm sure this will help many traders because it's all about risk at the moment and it's all about where markets are. But you can see where I've drawn this arrow is completely in line with your earliest area of long-term key support. Okay. The best part about this and the most significant part about this is not the flippy eclipse that won't stay still. It's that. Look at those moving averages. You are miles away, absolutely miles away. The last time you were that far away was on that push after COVID and significantly after this drop. Okay. The reason why you had that reversal all the way is because the drop was so ferocious and the market sentiment, similarly to what it is now and what it was on crypto, etc., is booming. People are dying to put their money in the market. They're dying to take risk. And they always are when there's happiness and sentiment, because you've got to think about the mass market who is dying to buy. And myself and, you know, everyone who is professional at what they do is on the other side waiting for the fall. Okay. And that is when everyone who didn't take their money is closed out, and everyone who just bought is also closed out because they're taking terrible value. Now you can see the support level I've labeled comes in line with your earliest MA again, because it tracks the recent market trajectory or the overall strong uptrend. Okay. So that's why it's a really good reference point. That's why I use MAs, because they're telling me what the weather's like outside every day. They're telling me are we extremely high or extremely low, because I need to be informed about that constantly to get a good market value reading at all times. I want to know how high are we, how low are we within a specific scale or amount of candles. Okay, or price history. And these are all in-depth topics you have to know. You can't just go willy-nilly and short the SPX, short Bitcoin and say, wow, I'm great. You know, I'm gonna short into everyone else is buying and I know everything. It's not gonna work like that. You have got to have exact risk plans because you're trading a risky market at the end of the day. Okay. Now you can see, like I said, you're well above your previous high. And it's just that extreme market sentiment. It's people dying to buy, dying and dying and dying. But what happens after they're dying to buy? In every case, it falls eventually. It's if not when. and it's up to you as a trader to take value at the correct times to the short side. Now, even gold, for example, okay, you can see it's come up slightly. I should put a short in here on this paper trading thing. There's so many traders in it. There's like 80,000 people. Even if you trade properly, you're going to find that you probably won't win. So that's why I just slammed it short now. I'm willing to hold it. I mean, it's a bit of fun, really, I think, all of that. But I think anywhere around here, okay, you will probably end up getting short because you've got this key market rejection, okay, right there. So like I said, I just punted it on, this is paper money, and it's the TradingView challenge. I'm not sure if anyone has gotten it yet. It's that one there. But like I said, there's like 80,000 people doing it. Okay, you'll get someone who has no idea what they're doing, who just, either shorted it now and then it plummets, or gets it long now. It doesn't matter what happens. Normally when I'm trading, I'm looking at sort of 100% throughout the year, market double, not doing an enormous amount, waiting for falls like this. But even if you do that, that would be 8% gains, which someone is already at on the challenge. So whether they know what they're doing or not, it doesn't really matter. I'm glad as well, Michelle FX Markets, like I said, we cover it live every day with the exact risk plans for hedging, everything like that. So if you do want to take it seriously and trade with us, the room is there. There are a lot of guys who are here every time. But the risk on market, like I said, I'm still short, and I'll hold that. We'll see where it gets. I should think eventually you'll fall after your rise. Similarly with your SPX. I'm also short the FTSE for anyone who tracks this, because I make a lot of calls. I did an analysis. I called it short there, and all the way along, I told everyone to exit various times. So if you've taken gains constantly, well done. There's somewhat of a risk on market in UK markets because they've come up, but you can see this is very much pushing to the downside. The outlook for the UK is pretty messy, because, well, there's a budget coming out on the 6th. I live here now. The taxes are all going up. Company profits are going to be taxed even more. Personal dividends. The Chancellor thinks he's helping everyone, and he's not at all. They say it's just all a load of rubbish, basically. But I think you'll come under that low there, and I think ultimately you'll get back to your key MAs here. So a slightly less risk-on environment. Things like your CAC, I'm still holding short. You can see weakness there, but again, risk-on environment. The French are loving it, and probably celebrating with a nice glass of rouge, Vino Rouge, and waiting for a pullback here, okay, which I am as well. Although I'm not French, I am going there soon for my birthday, my 25th. A nice house in the countryside by a lake or something to try and relax after looking at screens like this all the time. But yeah, 300 points more. Again, it could take a while. I wouldn't be shocked if this takes time, but we're looking at the factual approach. I'm willing to wait on all these shorts and just put orders in. Oil is one I would be slightly careful on. It doesn't really reflect a risk-on environment, but I think you'll keep going up slightly. You could lightly short. I did earlier. But yeah, main focus of the day is risk-on markets. You can see you've got these slight bits of rejection, which gives you a slightly early hint. But you can see also the rejection to the downside is so poor because there's still momentum there. So the only thing that's going to pull these down is the negative market sentiment and the change in rhetoric. Okay, sentiment absolutely drives the markets. So we cover sentiment in detail every single day. We post massive reports. We dissect the economics of the market live on screen, and in a way everyone can understand. Because if you're trying to make this hard for yourself, and you think, wow, I need to be an economics professor to get this, you just really don't. Okay, it's completely not about that. You more or less are looking to take information, make it small, make it easy and understandable, so you can digest it. There's no good trying to decipher everything and work out what jobs data means and how it's going to do this, that, and the other. You want to know what the central banks are going to do, the hints they're giving out, because the supply of money in an economy generally is what's going to control the health of risk-on assets like cryptocurrency, like the SPX as well. Okay, that is what is going to control it. All right, and similarly to gold, I'm also short on this. I'm short Bitcoin. Like I said, if you're taking part in this competition on here, like I said, you've got to compete with 80,000 people. Even if you're a professional trader making 200% a year, you will get beaten because you're only going to make like 17% in the month, and there's going to be someone who punts it and takes a massive short and it gets slammed and makes like 50%. Some guy who's never traded or anything like that. So I wouldn't bother trying to trade that properly because you're just competing against too many punters. All right, it's like betting in a horse race or a lottery. It doesn't reflect really too well the skills individually, I would say. If it was limited to a certain amount of participants, it probably would. But anyhow, like I said, if you're serious about trading, it's very, very cheap. We'll do 10 to 15 hours live with you on charts every day. We use various methods that are more in detail than now. They cover full risk plans for all assets. I did a video on Friday for all Academy members to lay out a portfolio and just correlate risk to your equity at all times, which you really have to do. So if you're serious and you want to get it right and you're looking to trade for income, whether that's swing trading, day trading, scalp, whatever it is, you can do that right now here, and you can join us in about 2 hours when we'll be live on charts going over it. If you've got a question at any time while we're live, you simply ask us in the Discord. We will answer you live with our voice. If you still don't get it, we'll sit with you afterwards and type it out. We just absolutely love to help all our members get success, and we're 5-star rated, 1,100 traders taught. We just really like what we do, and we do it every single day live, and you can't get it for that value anywhere else. Nobody is going to teach you at that price. It's incredibly cheap. So I hope to see some of you on board there, some of the guys in the chat. Let's just put a message out. Remember to trade small in risk on markets. Please do not gamble and say I'm going to short, because if you don't have risk plans like we show you here, you will get stuck and it can be very, very costly. I know it sounds great to short the market and become rich. It's not going to happen. You need a strategy. So thanks for watching, guys. Please do click the boost. It will refresh